right, what's going on, everybody? You know, every few months, Bitcoin reminds us that freedom cuts both ways, right? So this recently here, we had, I think we mentioned it last week, we had the $15 billion in seized assets, Bitcoin. That was, the whole pig butchering Cambodia thing. Bitcoin Jesus, Roger Ver, he makes peace with Caesar. I think it's a $49 million settlement for the tax evasion claims that the government's got on him, right? And then we've got institutions who piled in last week with record ETF flows. And so, you know, this dream of financial sovereignty meets, I guess, the reality of human behavior. Greed, governance, eternal fight with extremes, right? So we built digital gold and then filled it with the same old human flaws. What do you guys think?
That was quite the introduction there. I feel like that was rehearsed. You know what I mean?
Chapter 1 of the sequel book?
I feel like that was rehearsed. Like you spent some time on that this morning, especially the line that says about gold and then filling it with, you know, the flaws of whatever. I feel like that was
also whatever, the same old human flaws.
Yeah. Can you say that one again? Because that was pretty good. What was that?
We built digital gold, right?
Did you see him look over? He's reading.
Yeah, now I'm reading it now. And then we filled it with the same old human flaws. I didn't want to screw it up this time around.
Gotcha.
Yeah. I mean, seriously, and I think this is probably a really good time to talk about this actual thing, right? Because you have the Bitcoin purists. We all know and love Fibo, but, you know, Fibo's very much Bitcoin purist. And then we have what we talk about. It seems like more than anything else, you know, week after week here for over, a year and a half, which is this idea that in order for Bitcoin to, I guess, reach its full form, it's getting integrated into the financial system, the global financial system. And in doing so, you know, we have to give up a lot of, Bitcoin is just free to do whatever you want. And now it becomes more of kind of, you can do what we say kind of thing, right?
Well, here's the reality. A lot of people still believe that Bitcoin is outside of the box. You know what I mean? Like that it can't be controlled, that it can't. And that's just not the facts. The facts of the world are as follows. He who has the guns makes the rules. And then he who has the guns gets the gold. And then they tell you that he who has the gold makes the rules. But ultimately, everything is enforced by force.
Yeah.
That's part of the word, enforced. So, you're not going to ever escape that. And that's why fiat currency, for all intents and purposes, is the best layer 2 settlement debt protocol that has ever been created and that ever will be created. Why? And it allows, there is a system of survival of the fittest that's going on as it relates to fiat and management. And there's also a dominance, no different than in the crypto space. Like there are currencies fighting for dominance. And the US dollar has been the dominant dollar. It's been Bitcoin for a very, very long time. And that doesn't happen just because of just, by happenstance. There's a lot of enforcement behind that. And I think that, it's stupid, in my opinion, to think that any currency is going to be allowed to take center stage in a financial system if it's not subject to that very system that it's helping. If it's outside of the system and can't be enforced, then it's of no value, because it corrupts the very foundation by which governments are built, which is enforcement and, might.
Yeah, and I think that's a great point, because the thing I've always heard is the U.S. dollar isn't backed by anything, but realistically, it's backed by the United States military.
Those big black planes that we saw flying in the sky.
Exactly, right? We've got the world's largest and second largest air forces, right? We got the largest Navy. We got boots on the ground in 194 recognized countries. I mean, at the end of the day, like it or not, the U.S. dollar is backed by the force. And I think that's a great point that you brought up there. What's Andrew thinking, though?
He's reading some newsletter from a financial firm.
No, look under his name. Look on his
percentage.
name.
CFO, TexasWest Capital. I noticed you put a space there. There's a differentiator. It's not.
Yeah, he's a different company.
It's a different company.
He's like those Chinese knockoff brands, you know.
Who's gone to the trouble of filing trademark? I mean, who's suing who? This is the question.
Oh, Lord have mercy. But anyway, so what do you think, Andrew? Or have you been paying attention?
I think what's the most compelling thing that's happened this week is, BlackRock is out there pounding the table for all of its clients, all of its institutions, all of the advisors that it serves. They're out there in force saying, a drop in Bitcoin is a buying opportunity. So, you go take a look at Tyrone Ross, his Twitter account. He's a well-known independent RIA financial advisor, has built a big firm. And he said on Friday, when everything happened, he's like, I guarantee you that BlackRock's going to be making calls for this to be a buying opportunity. And then he quote tweeted it on Monday, and he said, yep, just got a phone call from one of their, sales guys looking to put the next 100 billion into IBIT. So when you couple that, at the, let's call it, soldier level for BlackRock, right? People that work there. And then on TV on Monday, Larry Fink is pounding the table, not only with Bitcoin, but with tokenization, crypto. This is the next thing. We have to hurry legislation. We can't miss this moment. Everything is going to be tokenized. I mean, we can talk about short-term price movements, bouncing around in the way that we did. But the truth of the matter is that the larger narrative has been set, and it's going to wash over us like a wave. It's interesting to talk about, dollar dominance, as the dollar has been dominant, since the 20s, 40s, 50s, and has only grown from there. But in the larger scheme of like civilization, a 70-year, 80-year run is not necessarily a bit huge. And does it go to nothing anytime soon? Absolutely not. But there are some items and some let's just call it cabals nipping at its proverbial heels. Bitcoin being one, all the stuff happening on the other side of the globe being another. I think we're probably we're abating the nipping at the heels right now with Trump in office and his particular administration. But if we go in reverse associated with the strength of the United States, we may pull an Achilles tendon or something and have a little bit of trouble. That's possible. So plan accordingly. Bitcoin is a pretty good way to do that.
Yeah, and it's good that you bring up, I think, that point about, the US dollar and, things are kind of nipping at it. Something I've been talking about lately is, again, people always talking about this, especially lately, the hyperinflation of Bitcoin or of the dollar, right? We had Jack Dorsey back in 2021. He posted on there, we're getting into hyperinflation now and blah, blah, blah. And at the time, I mentioned, hey, listen, man, I love what you're doing with everything else, but I think you're outside your wheelhouse here because we are not in hyperinflation. We're not going to be there anytime soon. Got a lot of hate for that, but here we are, and we're not, right? We're not.
Well, let's just say it's an S curve, right? Let's just say there is a hyperbolic part of the curve. The question is what segment of the curve are you looking at, guys? And unless you have a huge amount of time where you can actually see a change in curve, you really can't deduce which portion of the curve you're looking at. If you're always taking a little section of a curve around a curve, you're just looking at a straight line in the direction you want to look. That's really what it amounts to. And people do that all the time. It's called curve fitting, but it's bias based. It's what I want to see in the charts versus what the charts are actually telling me. And what the charts actually tell you is a reactive move. Now, there are different ways to de-risk entry points based upon reaction, But a true technical trader is waiting to see in the rearview mirror action that has already happened, and then he takes action or she takes action. That's you have to know what you're looking at is the point. And if you're always looking with a bias, you're going to get fooled. You're looking at too short of a segment of the curve.
Absolutely. And, as far as the dollar goes, again, the continuation of argument there is, yeah, it's going to lose some of its headiness here, in the global thing. But so I think it becomes more of a multi-currency kind of thing, but it's not, it's going to lose some control, but at the end of the day, it's still going to be up there toward the top. You'll just see other things kind of coming in, competing with a little bit more as this world kind of moved from this big way it was to what we're doing now. Right. And so, again, I think everybody, especially if they're in Bitcoin, again, I've been, pretty heavily into this since January 2017. And a lot of retail still today come in and they think, oh my God, in order for Bitcoin to survive or to do well, the dollar has to die. But that isn't true, right? We just have to keep printing, right? And we can keep printing as long as, as long as our production is greater, right? As long as we're kind of keeping up with that printing, you could theoretically, I guess, print, into oblivion, into continuation forever. But, so
he who drives retail gets to print. That's kind of the way it works. And we drive retail in the world. So unless another economy can step in on the innovation that we do, the distribution of that innovation that we do, and the consumption of that innovation, we dominate in all three of those categories. So I don't see, but back, my whole point is this: like you say, we are big believers in Bitcoin, and my purpose in this analogy will become clear. I believe there's a lot of upside in Bitcoin, which means I'm assuming that I'm on one portion of the Bitcoin curve, right? I'm assuming that there's still a parabolic move, or that I'm before the parabolic move. Take gold. It's also at all-time highs. If gold returned back to $1 an ounce and Bitcoin returned back to $1 a Bitcoin, which do you think has a higher probability of return at that point? Gold. Because gold has a bigger curve to measure its historical price against. Bitcoin is a shorter curve. Time equals stability, period, the end. And if I can look at all of humanity and go, you know what, gold should be valued at least 15. There's more solidity there. There's more confidence in a return to a mean price, or a return to a price that makes sense, versus something that has a shorter lifespan like Bitcoin. If it went back down to zero, there would be a lot of people going like, is it ever going to return? Is it dead? You know what I mean? No one would ask, is gold dead? No one, it would just be like, holy cow, no one has any money to spend on. They're buying, the only money that anyone has is for food. That would be my assumption if gold went to $1, right?
Well, let's not do that then. All right.
Yeah.
So what do you guys think about the whole Roger Ver thing? I mean, again, remember he left, what was it, 2015, somewhere right around there, left the U.S. The U.S. has been after him with this whole tax evasion thing. He settles for $49 million. What do you think? He's just giving into the system, or,
it's a testimony to two things: the nature of the system and lawyers. So my guess is that lawyers printed an enormous amount of billable hours throughout that whole thing. He was in a location that wasn't keen on, giving up Roger Ver, but Roger also didn't want to spend the rest of his life sitting in one spot. So what's the bid on the adjustment to what I want to make to my life? Okay, it's $49 million. Then I pay the $49 million. They probably wanted more than that. Roger probably wanted to pay less than that. And again, we're in a position right now where that was impossible in 2024. No chance that any deal like that gets done. Now we're in a position where that deal can get done because of, where the administration stands on some of this stuff. Whether good or bad, it is also the reality. If you're somebody that doesn't have those resources, you don't get a deal like this. You don't get to choose door A, door B, or door C. You're just shoveled right through door A, whatever that happens to be and whatever the government thinks. Is it some sort of narrative associated with Bitcoin? No, it's a narrative about the justice system and the levers what kind of levers get pulled and why and how, and most importantly, when.
Well, and
I
think
look at it as a cheaper than divorce for him or most wealthy people. So most people, I mean, look at what Bill Gates took as a hit when he got divorced. Like this is a haircut. And so in the grand scheme of things, I don't know what his net worth is, but $50 million to be back on the winning team with the most might and the most enforcement, it tells me how strong America and the brand still is. Because if it wasn't attractive to be back in good graces with America, he wouldn't have paid that $50 million. You see what I'm saying? And so it tells me that still holds a tremendous amount of value in the world. And there's steps being taken by which he can, quote, pay his debts. And I'm not a big believer in monetary infractions being physically enforced. That seems disjointed to me. But I am all in favor of if he needs to, quote, make good on something that he owes, then by all means, good outcome for both parties. Debt gets paid and he's back in good graces, and we get to now hear all the incredible stories of his journey from here from when he kind of disappeared to now. I honestly don't know much about his story. I couldn't vouch for his character one way or another, or what he got entangled in. Obviously I know who he is and kind of know that he's been on the run, but it's really interesting. It'll be interesting to see kind of what when he starts taking interviews and stuff, what happened.
Well, yeah, and I think it's a great commentary again, just on the reality of being human, right? I mean, we all want to say, listen, Bitcoin or nothing, and rah 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 and all that, but at the end of the day, humans are about self-preservation, right? And like you said, he had to make that choice. Okay, well, or as Andrew was saying, well, the country's not going to extradite me, but that means I got to stay here the rest of my life, or if I want to live, if I want to be able to come and go as I please, if I want to not have this target on my back, I've got to basically kiss the ring of Caesar, right? And do my thing. And, I think most people choose the same thing, right?
I think if they value the system that we are a part of, then yes. I think that, Caesar's a pretty powerful guy.
Yeah. So, again, it makes for good rhetoric online, I think, for most people. But at the end of the day, we do what we view is in our best interest. And for most of us, again, that is the movement away from pain, right? As human beings, we deal with two great emotions, greed and pain, right? And or you could think greed and fear.
It is.
But the biggest one is that fear. It is that.
Yeah, it's impossible to outrun the federal government when they come after you, unless you have an enormous treasure chest. It doesn't happen. There's a reason why they have like a 98%, rate of finishing off particular cases with people landing in jail. Unless you have the ability, and then also the timing / opportunity to pay off what it is that you're associated with, even in financial cases. But think of it this way. Think of the financial crimes that somehow, that somewhat went down 08, 09, 10. Who were the guys that got in trouble for that? And what were the real reasons that they got in trouble? So insider trading, I think of somebody like Rajaratnam, right? So high flying, huge hedge fund, well respected across Wall Street, but the guy got like 11 or 15 years. Everybody knows, like everybody on the planet knows that insider trading is, frank, even the very definition of it is hard to, it's like trying to nail Jello to the wall, right? It's just nearly impossible. But during that time frame, you had, again, at SDNY, you had an attorney there, attorney general there, that wanted to, that the opportunity and the sort of the mood of the country was, we've got to put a few pelts on the wall, right?
But you got to make examples of people because the system's broken. It needs a correction in course, right? And
yeah, and so those guys, are like, what the heck, man? I literally my entire career, the idea of insider trading is just how the market works. Like this is just people talk, and then you make decisions. It's, what are we talking about? And then you end up having an environment where, hey, we're going after this, right? Like the guy that owns the Mets right now, Steve Cohen, billionaire, they came after him for years for, again, how he set up his hedge fund. Again, he had lots of money and the ability, and he set up his system pretty well that he was somewhat insulated. And they couldn't get him. They tried to get him with everything you could imagine, right?
Yeah.
And after it all finished up, his firm, quote unquote, legally dissolved, paid a huge fine. He restarted his firm at another time. It continued to grow, so much so that I'll buy the Mets for like $2 billion or $6 billion and just, have fun in life. So it really is more about the moment that you're in from a legal standpoint associated with.
Well, nothing is more evident than that, Andrew, than the crypto space. I mean, look at all the companies that right. You look at some of these exchanges that were early crypto adopters, right? They're, by definition, you had bad people using the exchange. It had to happen. You know what I mean? And so if you were going to enforce, that money, quote, laundering, I think anyone who owned an exchange would be, quote, guilty as charged, because I don't think there was any ways in which in the crypto space you could gatekeep that. You know what I mean? There was no KYC, there was no AML, there was deep liquidity, markets were flowing, all that stuff was happening. And, I think that Coinbase and the likes have kind of made an on-ramp that's a regulated process that they're comfortable with. But you still look at a lot of the exchanges and you go, there's a huge discrepancy in enforcement. Like some of them were basically put out of business and some of them weren't. Some of them incurred extensive legal battles and bills, like Ripple, for example. I mean, look at how much, I don't know how much they spent on that lawsuit, but.
Well, Coinbase spent certainly more.
Yeah.
And so, you spent. That's the thing. Like different administrations, they're going to know if we've got a quote unquote Republican administration, all right, free sailing, right? But then you've got to think to yourself, well, at some point the wind's going to shift. There's going to be a different way that things are looked at. So we have to be legally prepared for what's next, right? It is extraordinary in the crypto space. So, for example, like a guy like Arthur Hayes and the guys that own BitMEX. I mean, those guys took a huge hit. Heck, CZ and Binance, the guy went to prison for 4 months.
Well, and that's truly, that's a prime example of like, I don't know what the difference between the biggest those are, but I could probably guess not that much. That would be my assumption, at least. I'd love to know the details if somebody can correct us, but I would assume that, one kind of looked like the other, but one got a very different outcome than the other,
And supposedly the Trump administration is looking at what do you call it for CZ? Not commuting, but his my God, pardon. What is the word?
Pardon.
Yeah, I guess is it pardon? Yeah, whatever it is, where they kind of remove the the fact that he was found guilty and sentenced and everything. And did all that, which I thought was kind of interesting because you brought up again, what's his name over there from BitMEX, Arthur Hayes. He ain't getting no treatment like that.
Yeah, I would assume that he may have a lawyer or two that's trying to make that happen. You'd be foolish not to. But that's the only way you get anything expunged, by the way, on federal level, is basically the president has to do it.
Yeah.
Like if you get clipped, it's never going away. Now, when it comes to state stuff, this is a wholly different animal, completely different animal. And
which means that in order for CZ to operate an exchange in the U.S., one would have to assume that would have to be.
So are we saying right now?
I'm not saying.
Are you
anything.
saying right
I'm
now
just,
that that's his goal? He's going to get.
I'm just taking a marker and drawing across a bunch of dots on the page.
Hey, I just wanted to kind of lock it down here. If that's what you were saying, man, we can say, hey.
I am saying that Binance is, in my opinion, predestined to be an American exchange or have an American division. There's tons of American customers that already use it. And so they have to figure out a way. You can't put that genie back in the bottle. And it's too easy for people to, through VPNs and stuff to go around the current IP system that manages that. So making an allowance and making some sort of, regulated infrastructure that's a U.S. entity that's owned and operated by him makes a lot of sense to me. That's what I see a lot of companies, and I won't name some other ones that I have seen firsthand doing this, but they're coming back to the United States. That's the truth. Like we're friendly now, so everybody's coming back. And
people were running. They were running for the door the last 4 years. And
a reminder that companies like Gemini and Coinbase, which are both now public companies, were heavily exploring not only expansion outside the United States, but moving operations out of the United States. So when you had, the head of the SEC, which of course is going to, hand in hand with the DOJ, literally talking every week on whatever channel he happens to be on about crypto being filled with hucksters and scammers, using that terminology. Like, yeah, I mean, you had a significant budget line item for legal defense associated with crypto.
Yeah. And so and here we are. We go through all this. We have, all this going on. Again, I think we just kind of, do what you need to do with Bitcoin. But again, our goal here has always been, listen, here's the way things like this usually play out historically, right? Here's how it gets, when it reaches this point, it gets kind of sucked into the system. It becomes part of the system, and we do that so that way people can make, hopefully, the best decision possible as far as their investment in Bitcoin goes, right? So now we had the all-time high, and then we had the second largest day of inflows last week since 2024, January 2024, when ETFs first launched, and then boom, it gets hit, right? And we do this quick drop, same day, rally back up, close 50% back up, right? And so here we are doing a little sideways. So what are you guys thinking here? You thinking, listen, we've still got further to go. Have your ideas about this cycle changed now because of this one-day event? Or, are you still looking the same way?
I think technical analysis is going to have to account for price target percentage accuracy deviation a lot more.
That's a lot of big words, man.
Here's my point.
EPADC or something. That's the new acronym.
Here's my point. Chris and I are technical guys. We look at price points and we go, okay, here is the price that has to hold in order for that structure to maintain its validity. I would argue that there is this unique time that exists where DEXs can be overcome with small amounts of capital that then trigger buying events on central exchanges, because there's arbitrage to be played. Because if you overwhelm capital, so there's a decentralized exchange out here, and let's just say it only takes $2 million of a market order to move the price of Bitcoin from 123,000 to 126,000, breaking its all-time high. All right. Real kind of scenario here. And let's just say that on that decentralized exchange, I can look at the order book and I can go, man, there's no liquidity here. I'm just going to buy the book up. So you just dump that money into the DEX and you buy the price up. Well, the price instantly is way up here on the DEX, and the price of Bitcoin is way down here on the central exchange. So what happens is automation, market making automation, sees the discrepancy and starts buying the price up on the central exchange. Well, the same thing can happen on a cascading down event. So if you go onto a DEX and you have high leverage, 500 to 1, and you are targeting a very illiquid time in the market, and you overload that DEX, there's going to be a huge sell-off in the DEX. Price discrepancy is realized by all the automated tools. They start selling to get the price of the central exchange down to equilibrium price with the decentralized exchange, and that's what they monitor, right? But if you keep finding ways to cascade the price with little capital on a decentralized exchange, you can fool the centralized exchange to actually the market makers to cascade the price down. And those aren't even real sellers.
Right.
Those aren't even real sellers.
Because price is going to chase. Price has to change the opposite, right?
Well,
and
what
so
happens
if it's
is
going up, it has to find a seller. If it's going down, it has
right.
to find a buyer.
So the market maker is going to find that seller, right? And then it hits huge margin limits that dump because margin has been reached and there's a margin call. They're flushed. Those accounts go to cover those positions, accelerating the problem, and that's what I believe we experienced last week. So if you say, okay, well, how does that affect how I trade? You're just going to have to realize that the violation of some of these lines are going to have a plus or minus attached to them that you didn't once have to account for, because there is a unique opportunity for manipulation with the big players between a disjointed price in the central exchange and the decentralized exchange and the spot price of Bitcoin. That is, I think that's what's going on personally, but.
Yeah, and I was on. I do a trading spaces every Tuesday that Quantum Economics puts on, and I was asked that question. How do you teach traders this? And I said, well, the first thing I try and talk to traders about is, listen, the market's going to do things that you're not ready for. You need to always assume that you're not going to be prepared at some point, which means this whole idea of proper risk management, is just absolutely required. And, there's multiple ways to go about it. I teach, a specific way, but, at the end of the day, this idea that we have any control over where price goes is really kind of silly, right? We really, all we have is where are we going to enter, where are we going to exit, and what's our risk,
the control, it depends on what time frame, what portion of the curve you're looking at. Because if you're talking about control against things that happened to us last week, there are controls in the traditional markets. They're called circuit breakers.
Well, no. I mean, we ourselves as traders, if I think, man, I'm going to go long here because price is going to go to 125, I don't actually control price. I cannot force price up to 125, right?
No.
So,
no.
Again,
but you
so
can even try to control your risk, even in things like, these events that you took. The only way you could have avoided the risk of the event that took place last week was not be in any margin at all. No borrowed positions. And if you were there, then you were in cash, most likely you were trying to smash buy. I was. I mean, I think everybody that was, watching it go on, it was like, holy smokes, this is an anomaly. This is something that doesn't make sense. And it's almost like a cascading of, event that's almost like a failure in the structure itself, right, in that moment. And yes, we returned to an equilibrium, but there's a lot of casualties that could have been avoided if there was circuit breakers where, at a 10% trading percentage or 5%, whatever, there's a trading halt for 24 hours. Those things exist in the markets for these very things. So
that's actually my next question. Andrew and Tillman, do you guys think that we're going to start seeing them implementing circuit breakers? And if so, how long do you think it takes till we get to that point? In crypto, obviously, what I mean.
I think you have to in Bitcoin, and I think the more correlated the instrument is to a TradFi market, like if you have Bitcoin ETFs and Bitcoin spot, has to have a circuit breaker, because the danger lies in these asset prices becoming disjointed and the algo chasing, right? The market maker algos are powerful, man. That when they want an equilibrium, they're gonna get it, and they're gonna get it at any cost. And there's a better way to do it than just chasing price. There's a way whereby which the market makers can cause a pause on the market and reestablish good volume of trading activity on both sides of that price, and then let the games begin again in a reset. And it's no different than, like, if there's let's say you're in a wrestling match, right? And you do a move and you go to pin the guy and it's an illegal move. Well, the ref goes, now reset, stand up, let's okay, square up, go. And you gotta redo. It wasn't fair. And what happened on Friday was it was a flush of lots of leverage.
Leverage, leverage flush. Until it proves otherwise, that's all it was, right? I mean,
what's the other motive for anyone?
Well, what I'm saying though is, people are, I've said that it was a leverage flush, is what I said, online.
Yeah.
And I had people questioning, well, is that really what it was? Well, unless we get follow through lower, that's what it was. And I mean,
even if we get follow through lower, it still could be a trigger event. Like, listen, I can shoot I live in Colorado, and during winter, if we get a big heavy snow, the avalanche patrol go around shooting dynamite up on the hill. Guess what? The stick of dynamite doesn't do the damage. The avalanche does the damage, but the stick of dynamite started the avalanche.
Yeah.
So, you can call it what you will, but if you are able to trigger a cascading events that makes for a moment or for an intermediate period of time, the market to lose confidence in its upward trajectory, that can cause more downward pressure, right?
What about you, Andrew? What do you think, man? We getting circuit breakers in crypto, and if so, how long?
I don't think anytime soon. It's going to be a while. You don't have the likes of a NASDAQ or an NYSE or the conglomerate that is ICE, Intercontinental Exchanges, where they can put those rules into place, and those rules are across the board, right? So you have literally just two entities that control the exchanges in the United States. So they've agreed to those rules, agreed to that circuit breaker stuff. How many crypto exchanges do we have? 500? I don't know. A lot of them. So there's no version of that's happening anytime soon. And the real reason it's not happening anytime soon is because the money that's made in moments like Friday, Saturday, Sunday, and Monday, right? So the money that's made associated with options, associated with the ETFs, associated with those types of adjacent products has just started. So volatility equals additional revenue. So until that narrative kind of flips, and they're like, okay, we've got enough revenue because we have these other products now that are going to be a little more consistent revenue from this asset class. So, okay, now we'll implement something that will press down and sort of shorten volatility. So, that's how TradFi works until they find another, faucet to turn on before they slow this one down or turn it off. They're not going to do anything with the faucet that may gush.
Well, to your point, they may not be able to. I mean, the way that if I want to start a decentralized exchange tomorrow, I can start one. You know what I mean? Like that's the nature. I mean, look at what the Trump brothers did. And so, if you can just cause it, what it tells me is going to happen is they're going to have to put a ton of liquidity into this market so they can control that liquidity. So therefore they can essentially have enough liquidity to fight off any of these attacks that take place, these trigger events. And it also tells me that they're going to have to go 24/7, because that's where all the vulnerability lies, right? It's when one's closed and one's open. And we've been talking about this for, since the show started, is like there's going to be a disjointed price at some point, and that is going to pose a great deal of opportunity for people that have the bankroll, like an exceptional opportunity. Like if you bought at the bottom of those wicks,
Yeah.
it's probably the buys of, the cycle.
Yeah, great. I mean, quick, you were easily in profit pretty quickly, right?
Yeah.
Now, so the one thing I talk, usually it's all about technical analysis with me, but I always have people asking, well, how else can we know maybe that the low is in? And so some of the things I talked about was if coming up, obviously bond market was closed on Monday. So that, again, I said that would be good. Somebody asked me about that. Is it positive or negative? I said it should lean positive because you don't have that, kind of pushing down on price. But then when Tuesday opened, the idea was, okay, are we seeing the DXY, muted, falling a little bit? And on the top of that, do we see the 10-year, the 30-year, do we see that start pulling back, especially the 10-year, when the bond market opens up on Tuesday? Yeah, exactly. And did we see ETF inflows expanding as well, which we also got? Tuesday was 340 million, I believe, were the inflows. Andrew can correct me if I'm wrong on that, for Bitcoin ETFs coming in on Tuesday. So, when we look at that, that seems to be quite significant toward the end that, that low is likely in. So, I mean, I'd like to see, it still move up a bit higher. But I mean, when we look at that with what we're looking at technically on there, and just from a technical standpoint and ranging, that candle and that wick on Friday were absolutely fantastic.
Just on the 10-year, we went from 414 down to 404 right now, and even clipped 402. So, we've moved meaningfully down. I know Scott Melker was all hot and bothered about, when they did the rate cut, rates went up. Well, that lasted all of 15 minutes. It's come back to where it was, and maybe even a bit lower than where it was before the rate cut. So yeah, it's been a meaningful pullback. In fact, it went from 414 to right at 4% as of like yesterday. So, it's bounced just a bit, 402 to 404 today. But I mean, to your point, as it relates to, again, adjacent data points associated with a significant move, all points lead to maybe not necessarily significant problems ahead.
Yeah, those are all great points, and I would agree with all of them. I have a little like a tool that I use in my own life, and it's like how many of my friends and how much did I get filled at the bottom of the wick, and how much liquidity was triggered down there. And I have heard from a lot of people that no one was getting filled down there. Like there was no liquidity down there. That this wasn't this was an anomaly event in algos and chasing an equilibrium price based upon a price being disjointed in two markets. Like I don't think that very many people got filled down at that bottom of the candle, or even all the way the midpoint down. So why is that important? Well, if there's no liquidity to sweep down there, the price isn't going to go there again. The price goes to where the trading volume is. And, at the very bottom, there were a lot of rejected orders, and a lot of exchanges shut down trading. They just said no more. So whoever was buying down there aren't short-term traders on leverage and aren't retail. Andrew said it on Melker's call yesterday, and I would echo it today and agree with it wholeheartedly. I don't think very many retail people got filled down there.
No way.
Yeah, I'm looking at
those types of trades. It's like, do you have a fiber cable, and are you 100 feet from the exchange? Those are the people that got filled on those trades. And only those people. And guess what? When one signal hit that exchange, 50 other big players that have algos watching the signal that are 50 feet from the exchange beat the 100 feet from the exchange in for the next trade. That liquidity got sucked up by a concentrated group of very deep pockets, exceptionally deep pockets, and no one else got to play in that. And that tells me that price go up. They're good buyers.
You went from 104 to 113 in like 27 minutes. I mean, it was extraordinary. I honestly just never seen anything like that. And I've been around these parts since 2015. I've not seen anything like that. No retail folks got filled at 104 or 105. I mean, 106, sure.
Yeah, I'm looking at the footprint chart right now, and there's nothing on the sell side there from like 103.5. This is the Binance chart, by the way, Binance Bitcoin USDT. It's just one I happen to have up, but that's the one that went down there to about 102,000. And from 103.5 or so down to 102, yeah, there's absolutely nothing coming up on the sell side at all. A lot coming up on that buy side, though, which again saw that, gave us that pop up that you were just talking about, Andrew, that quick move back up. So,
well, at the same time, I am sorry I'm making a lot of noise outside your house. As your lawn guy, I'll do my best to, knowing that you've got the show right now, I'll try to tone it down. I'll tell my guys.
The old saying, if a joke has to be explained, Andrew, it's not a very good joke.
Well, this is a podcast.
We already knew. We caught
what we do.
He just wanted us all to look where it says Chris's lawn guy.
Right. This is what we do on podcasts. Podcasts, you talk. So that's what we do. I think. So yeah. I thought
Andrew, you're the big ETF guy here, man. You're the big ETF guy. What do you think happens with ETFs over the next few weeks through, maybe toward the end
just continue to see inflows. We're not going to see outflows. Boomers have been trained. Then so no boomer was aware that Bitcoin dipped to 103, 104 Friday at 7 p.m. None of them had any idea what their IBIT position was doing. Zero. And so when they got back to it, maybe, and took another look on Monday, they're like, oh man, it's down a couple percentage points. I guess I'll throw a little more money in there. And again, a reminder that IBIT's wholesalers, which is the industry term for the salespeople that call up IRAs or Morgan Stanley offices and say, hey, put your folks in our product. Wholesalers were out in force on Monday saying, buy the dip, buy the dip, buy the dip, buy the dip. And they usually come with like a lunch or some morning donuts or some bagels, or, hey, when we do our next trip, you'll be on the first flight on the golf course if you do X amount, in this week. There's going to be inflows.
Some positive reinforcement.
Yes, there's just going to be inflows. There will be inflows. My question is how much, right?
Yeah.
So how much inflows to me is the other thing that really needs to be understood is we're in a timing issue right now associated with inflows, right? So it's October 15th. We got about another 30 to 35 days of very clear and clean inflows that are going to happen to whatever products you're adjusting your portfolio to. Once we get to like the last 4 or 5 days before the week of Thanksgiving, it'll start to fall off, right? Because now we're getting into the holidays and people aren't doing meetings or taking calls from their advisors when their family's around or when they're traveling. And again, when you're talking about high net worth, ultra high net worth people, they've situated their lives to where hey, I'm going to do a catch up with my guy or my team every quarter. Those things are happening last month, this month, and for about another 30 days. Once that 30 days is over, we're not going to see significant inflows happening. So we talk about price, we can talk about flash crash, talk about all that. All that matters though is flows. And because we're now in a position where BlackRock's CEO is the CMO of Bitcoin and is telling his soldiers to go out and absolutely fill IBIT as much as they possibly can. It's a self-fulfilling prophecy. So price action is going to stall. It's going to stay above 100 for a long time. Why? Because the inflows just aren't going to stop. They're just not going to stop. Certainly for the next month to month and a half.
So your position then is the rally needs to happen like over the next 30, 35 days.
I don't, how do you define rally? Do we go to 127? I mean, okay, so what? My guess is that 2026 is a much bigger year for Bitcoin than 2025 was. Why? Because rate cuts are going to continue to happen. We're going to get a new Fed chairman at the Fed that's going to be, as locked in with Trump as anybody's ever been. So the rate cuts will continue to happen. What does that mean? That means, giga printing of money, right? So to me, 2026 is a bigger year than 2025 could have been.
So yeah, I think we're in a new paradigm. I think price has proven to have broken the 4-year cycle. It also is uncoupled from the M2 money supply. I don't know if you guys saw that chart, but it's way below it. So if it does catch up, it's still lost its its par value with it. I think that it's different now. I think Wall Street has paper Bitcoin to trade. I think there's all sorts of leverage plays that are being, taken advantage of. And the volume is really what matters to them. They just want to see an increase in volume over time, because that's the definition of a deep liquidity pool. That's the activity that they need to generate fees and revenue. Like, that is the market, right? That is the definition of a market. So they're just looking at it as like, there's this infinite supply. We're going to continue to create infrastructure to satisfy that supply. That will naturally allow more traders to onboard and to be attracted to it. And I think Andrew's point is that rising tide floats all ships. But there will be short-term volatility that scares the crap out of the rising tide, right? That's the whole point of it, that you got to shake that liquidity off the tree in order to make the market attractive to the traders. And the volatility is what brings the traders to the game. Then, if you were able to 10x leverage trade last week's candle, you made 3 years of income in one candle, and that's what a lot of people are chasing. And so that's an attractive roller coaster in the proverbial theme park. We don't want to shut that part of it down. Let them ride it. That's a great thing, but it does come with its own consequences. You're going to get a bunch of adrenaline junkies participating in our market, and some would argue that's the future of investing. It's just a bunch of degenerate adrenaline junkies. And,
it's a crazy thing to think
about.
Argue that the trend didn't head it that way for sure.
It's also really interesting that the narrative around Bitcoin treasury companies, buying hundreds of thousands of Bitcoin every week has, let's just respectfully say, sort of fallen off a bit.
It's gotten a bit quiet.
It's slowed down just a smidge. That doesn't mean that it still is a little bit a part of the narrative, but point being is, we're still near all-time highs. And again, that has everything to do with once you get an ETF train moving the way that this one is moving, it just doesn't slow down for a couple of reasons. One, ETF investors at the retail level, I'm not talking about, some hedge fund that's using it as a carry trade or something like that. But, 90% of people in these ETFs are, ultra high net worth retail folks. They never sell. They never sell the product, right? So if they never sell, they only have two other options. It's either not buy more or buy more, right? Which the not buy more is still a version of not selling, right? So they never sell and they oftentimes buy more. So that just means over time, the asset class gets larger, the AUM associated with it gets larger, and frankly, the fact that it gets talked about gets larger because more people are in the trade, right? So yeah, it's that's going to keep happening. It's not slowing down.
And Jerome Powell just spoke. What was it, yesterday, or was it yesterday or today? And I think yesterday. And he mentioned there that they might go ahead and end QT. And I think a lot of people are kind of taking that as, oh, they're definitely going to do it right away, whatnot. But I think the important thing there, he mentioned the liquidity stresses coming in here. Their reverse repo is down basically to nothing. The Treasuries account there has ballooned back up since July. Now it's up 765, somewhere right around there now. And so, I mean, if you're looking at liquidity driving future, potential asset price rises there, I mean, QT stopping, I think is, a good step in that direction. But, I think people get too, especially, maybe it's just because it's social media, but I think people get too hung up on, like the flavor of the week. What is everybody talking about this week, right? You brought up there, tell me, that there was the disconnect there from the M2. Everybody been talking about, oh, M2 money supply, it's got to go up, prices going up, all this kind of stuff. Disconnect there. And I think, if you're watching the show and you're kind of maybe new to markets and new to these things, that would probably be the big thing I would say is be careful of those, words or phrases of the week, basically, because everybody's going to jump on them. We're going to jump on them quick. But at the end of the day, they don't tend to follow through a lot.
They're fun. But you get burned more often than not because you don't have any privileged access to that information. So by the time you hear it, you are liquidity, you are exit liquidity. You may be, less than the 50% tipping point where you're still profitable. Like if you're fast, let's say the top 1% of the people that got into Trump coin, for example, at the earliest, though that 1% of the populace, right, had the most earning potential on that curve. And let's say you're at the top 45th percentile. Well, if you play that trade right, you still have exit liquidity that you could take advantage of and make a profit on because you're below the 50% mark. But if you're in the back half of the liquidity, it's all exit liquidity. There, you're losing money on that trade because there are more sellers than buyers at that price going forward, which means the chart's going to go down from there. And so you don't know where it's literally like that gambling game that you saw so many people playing through social media where you ride the rocket ship up and it's multiplying. It goes from 1x to 10x. But at any point in time where 50% of the people press exit, the rocket ship blows up. And the 50% that are remaining, or the 55% that are remaining, pay the 45% that exited the ship first. It's basically that, but on in the stock market on every single trade, every chart.
Yeah, it kind of reminds me of this. There's this reality, right? So we get out there and we talk about markets and we say, listen, we're looking at this, we're looking for it to do that, and most retail traders are still going to lose money. And the reason they're going to lose money is because they don't know what to do with the information, right? They think, oh, access to more, or even their own access to more institutional grade analysis and all this. And they think that's going to make them, stronger and better traders. And at the end of the day, it just results in them taking more bad trades and losing more money because they absolutely do not know really what to do with that information. And that's always, when I'm posting stuff out there, somebody will be like, some people will be like, oh yeah, I did great, whatever. And a lot of those will be like, oh, you were wrong here, or I lost money here, or whatever. And it always comes back to that. Well, I can post what I want and I can try and remember to say everything that I can try and say, but I'm not going to remember to say it all, right? And, so when you look at that, and people are generally going to, they're going to focus on the things that they want to focus on, right? You can say, well, I think price is going to do this, but if it goes through this other level, then we're probably looking at this other one, right? And all they'll hear is price is going to go up. And if it doesn't go up, they'll be like, oh, you were so wrong. Like, well, no. I said, yeah. But
do you think later, I've got to go to jump on a call, but do you think you could forget to say the only thing you can control is what you lose?
I don't have to. You just said it, man. I appreciate it.
You forget that? It's wondering. I don't know.
I appreciate it, man. I appreciate it.
Make sure, my guys, it's important that you pay cash when we do your lawn. I got to get to the next lawn. So
I got my $5, man, for you. Don't worry about it.
I thought y'all were exchanging in Bitcoin. Is that not?
Oh, man. Anyway, well, that's it. That's the hour. I think we had a great conversation today. I really liked the discussion we had there about, just human beings. We've got this thing when we all came into Bitcoin, I think, or at least those of us that came in, a few years back at least, we all had this, F the system kind of thing. And, and then when you're in it for a while, especially if you've been in, markets and you're older and you've been through it a while, you kind of get to that realization, well, it's really going to do what everything else has always done. And the question then becomes, as human beings, we can have that. Yes, we believe it needs to do this, but most human beings are going to then, like Roger Ver there, they're going to step back. They're going to kiss the ring. They're going to do what they have to do to keep it going. It's just, listen, it is what it is. Figure out how to make money with it, right? We're not going to change the way things are. We just need to figure out how it's working and how to make money from that.
Yeah, there has to be patriotism amongst people that live amongst each other. That literally is like, look at all the conflicts that arise in the world, and it's because there's a huge discrepancy in belief system or culture, and there's a very close proximity geographically. That's a recipe for disaster. And so, I think what we as Americans need to rally behind, so to speak, is the fact that the American dollar, right, is something that is a part of our system, and it's something that does unite us, and we should use it, and we should promote it, and we should defend it. And, it's part of how we make an impact on the entire world. And it's one mechanism. It doesn't mean that Bitcoin can't live alongside it. And I think that's where, this all or nothing mentality, it just doesn't make sense. And it's really pretty easy to punch holes in, honestly, Chris. If you talk to any Bitcoin maximalist that says that Bitcoin's going to replace money globally, you just ask them, how is it going to buy coffee? Because it still can't do that. So, doesn't sound like it's going to replace money anytime soon. And I use it a bunch. So, the fact that I know kind of how it's used makes me pretty confident in that statement. When you pay a cashier, what if I handed a cashier a $10 bill to pay my coffee and I wouldn't let go of it for a minimum of $10? Would that work? Because that's what Bitcoin is.
There you go, man. Appreciate you joining as always, man. Lots of great stuff here.
Always fun.
Man, we'll see what the next week brings us, and hopefully it'll bring us at least higher highs locally so everybody can stop being so worried and upset on the short time frames. But as we were talking about earlier, right, it's the bigger picture. Where are we headed, 2 years, 5 years, 10 years, 30 years down the road, right?
Bring the dips. There
you go. Buy them up. All right. As always, remember, the only thing you control is how much you lose. Please keep working on that risk management. I do that for Tillman's sake.
I'm starting to think you're OCD, and it's a tick. You have to do it like you're, tapping. Some people have ticks. That's your tick. You can't end the podcast without saying that.
Gotta say it, man. Gotta say it. I'm just hoping somebody somewhere just takes risk management seriously. That's my whole goal. All right, man. Hey, listen. We'll see you guys. Andrew's not here, but we'll see him next week anyway if he decides not to go on vacation again. And we'll see you then as well, man.
See you, Chris.
Take care, everybody. Thanks for joining in.
Trading tip: always manage risk before chasing gains.